Welcome to Debt Matters. Today we're focused on a policy development from the DWP, the Department for Work and Pensions.
That's right. There's a new consultation out which gives a first look at 3 draft codes of practice.
And these codes are set to, well, really change how the state handles everything from benefit eligibility to recovering overpayments.
They are. They fall under the new Public Authorities Fraud, Error, and Recovery Act 2025. We're going to unpack these documents, the Eligibility Verification Measure, the Debt Recovery Code, and the Information Gathering Code.
Yeah, we want to get past the headlines and see what this actually means on the ground for, benefit recipients, debt advisors, and the collections industry. What new powers are actually on the table?
That's the goal, to see what the DWP will be able to do that it couldn't do before.
Okay, let's start with the big picture then. Why this new framework? Why is the government moving to introduce what seem like much stronger tools right now?
Well, the government's stated reason is about tackling financial loss from fraud and error in the welfare system.
So it's about efficiency.
It is. They argue that the existing tools are insufficient for the scale of the problem today. This act and these codes are designed to give the DWP more proactive mechanisms.
Proactive rather than reactive.
Exactly. It's about spotting issues earlier, and that's really the foundation for all 3 of these new codes.
Right. So let's get into the one that's had the most press, the Eligibility Verification Measure, or EVM. For anyone who's just seen the headlines, what is the DWP actually proposing here?
The EVM is a mechanism that would let the DWP ask banks to run automated data checks on accounts that receive benefits.
An automated check. So this isn't about DWP staff manually going through people's bank statements.
No, and that's a crucial distinction. The DWP would ask the financial institutions themselves to run predefined automated filters across their own data. It's a mass screening tool, but a filtered one.
Okay, that is a vital point. So what are these filters actually looking for? What kind of activity would trigger a flag?
They're looking for specific things that might suggest undeclared circumstances. So it's more about account metadata than the specifics of your transactions.
What does that mean in practice?
Think of it like this. The checks are designed to flag if an account holds capital above the DWP limit. So a big jump in the balance, for example.
Okay.
They'd also look for flags that suggest a beneficiary has been living abroad for a long time, which can sometimes be seen from patterns in international transactions.
So it's pattern recognition, not a list of what you bought at the supermarket.
Exactly. The proposal is clear that the banks are not permitted to share detailed transactional data.
Right. So no details on who you paid or where you shopped.
None of that. They are restricted to reporting only the metadata that triggered the flag. So they might confirm that a balance is over the limit or that an account holder has passed away. The EVM is designed to just signal a potential issue.
And then what happens?
A human official has to step in. They would have to start a formal, standard investigation before any action could be taken against the claimant.
Okay. So once the DWP has identified a potential overpayment, that brings us to the next stage. Recovery.
Yes, and that's where the proposed debt recovery code comes in.
And this introduces some pretty forceful measures, doesn't it? I'm thinking specifically of the power for direct deductions from a bank account.
It does. Direct deductions sounds powerful because, well, it is.
So how is it being framed? Because for anyone already in financial difficulty, that sounds quite worrying.
It does. At the moment, the DWP mostly recovers overpayments from ongoing benefit payments. This new power would allow them to take funds directly from a bank account.
A big step.
A very big step. The consultation frames this with commitments around proportionality. They state these tools are potent and should only be used as a last resort.
A last resort for what they call problem debts.
Yes, where standard recovery methods have already been tried and have failed.
If they are proposing taking money directly from an account, what about protections? Is there a minimum amount that would be left in the account for essential living costs?
The consultation does reference existing legal protections, similar to the rules for commercial creditors. They say a direct deduction couldn't reduce the balance below a protected minimum.
But is that minimum defined yet?
That's one of the areas where feedback during the consultation will be crucial to make sure that protection is robust enough for vulnerable people. The powers are also targeted at current and savings accounts.
Okay. Let's move to the final piece of the puzzle, the Information Gathering Code. This is a bit different, isn't it? It's less about mass screening and more about specific investigations.
That's right. This third code is all about procedural clarity. It formalizes how the DWP can compel third parties like utility companies or credit agencies to share information during a targeted fraud investigation.
So this is for when they already have a specific case they're looking into.
Precisely. It's about speeding up evidence collection in confirmed fraud cases while making sure everything adheres to data protection rules.
All right, so we have automated checking, direct deduction, and this streamlined information gathering. The DWP says these powers are all wrapped in safeguards. Let's look at those.
There are several layers. First, and this is paramount, is the human decision rule. An automated flag from the EVM can never, on its own, lead to benefits being stopped.
A person has to review it.
Always. An official must review the evidence and make the final decision. Second, there are the data limits we've already discussed. And third, they're proposing an independent oversight body.
To monitor how these powers are being used.
Exactly, to report on compliance and ensure accountability. And finally, there are penalties outlined for any DWP staff who might misuse these new powers.
On paper, those safeguards sound reasonable, but we have to acknowledge the reaction from some groups.
Absolutely.
Privacy and civil liberties organizations have raised serious opposition. They're using language like bank spying and warning about a huge expansion of financial surveillance.
The core fear is about mission creep, that powers brought in to target serious fraud could, over time, be used to scrutinize minor errors, or just place all benefit recipients under a higher level of surveillance than everyone else.
Creating a kind of two-tiered system for financial privacy.
Yes, a worry that accessing welfare means you have to give up a degree of privacy. There's also a fear of a chilling effect, that people might be afraid to save money for fear of triggering an automated investigation.
It really highlights that tension between the government's goal of efficiency and the individual's right to privacy.
It's the central tension of the whole proposal.
So let's bring this back to the professionals listening, people working in collections, debt advice, local authorities. What does this package actually mean for them?
For creditors, there are two main things. First, if the DWP gets better at recovering overpayments quickly, the nature of welfare debt could change.
And second,
The Debt Recovery Code effectively makes the DWP a more powerful creditor in the debt hierarchy. This raises real questions about priority debts and how commercial creditors will need to adjust their approach, especially with vulnerable customers who have multiple debts.
and for those in the advice sector, this consultation is the chance to have their say. Remind us of the timeline.
The consultation is open now, and it closes on February 27, 2026. This is the time for advisors, consumer groups, local authorities, and creditors to provide that practical, on-the-ground feedback.
Okay, so we've looked at the Eligibility Verification Measure, the Debt Recovery Code, and the Information Gathering Code. It's clear the whole thing rests on balancing the DWP's new powers against privacy protections.
It is. And for anyone advising people in debt, the question isn't just about fraud. It's about whether these new systems will actually reduce the burden of problem debt from overpayments, or if they'll just create new friction and surveillance for people in an already complex system.
As you consider the details, here's a final thought to reflect on. In the effort to quantify and reduce fraud and error, what role will future technology play in determining what is fair in the relationship between the state and the individual?